It's a phone state treasurer or a KPERS expert day today with these bills. Senate Bill 232 amends KSA 75-2263 relating to the management and investment by the Board of Trustees for the KPERS retirement system of money certified by the state treasurer as equivalent to the aggregate net amount received for unclaimed property. So the bill amends the statute by authorizing the board to invest in the bonds, notes, debentures, or similar obligations of a foreign government that the International Monetary Fund lists as an industrial company and for which the full faith and credit of such nation has been pledged for the payment of principal and interest. The country must be rated an A- or better by Standard & Poor's, an A3 or better by Moody's Investors Service, or an equivalent investment grade by a securities rating organization that's accepted by the NAIC. The investment in the foreign securities is limited to not more than 5% of the cash available for investment that may be invested, and investments in these foreign securities shall not be made in the bonds, notes, debentures, or obligations of a foreign government that's been identified as a state sponsor of terrorism, because that would be bad, or an authoritarian or totalitarian government where the sovereign powers are exercised through a single person or group of persons who are not elected by any form of legitimate popular voting. I'm also going to note that this is a bill that's a holdover for from last season. So if the committee chooses to act favorably upon the bill, I have not had enough caffeine this morning, then I would need to make a technical amendment to update some internal references to update the bill for this session. And if approved, the bill would take effect upon its publication in the statute book. And I can stand for questions.
Thank you, Eileen. Committee, do you have any questions for our reviser? Okay, seeing none, thank you, Eileen. We will call on our first proponent, State Treasurer Stephen Johnson. Would you want to come forward?
Thank you, Madam Chair. And thank you, Madam Chair, and members of the committee for taking time just to consider this matter. So just a little around where the bill is and the purpose. So the reviser did a perfect job of explaining it, but one of the funds that we have is our unclaimed property fund. Currently, there is $681 million in that fund. So it's not a huge fund, but it's meaningful. A couple of years ago, the legislature lifted the restriction of investing those funds for several years. There was a portion invested with KPERS to earn a return higher than cash. And it worked very well, even through the decade of the 2000s, which could have been a challenging decade for investments, but seeing that, the legislature and I agreed that it made sense to look at something other than cash. When those funds had been borrowed and had been paid back, we had them again in our assets. So the authority was there. The next year we gave the authority to be able to sell them. The first year we said we could buy it, and we thought, oh man, we need to figure out a round trip on this. But then in 2004, we started implementing that strategy. And one of the challenges, so I am very fortunate to have KPERS expertise and the KPERS board behind it, but so far I've had the opportunity to kind of direct how much we placed of the $600 million that we had. So right now I had left $400 million in cash while it was still earning 4 to 5%. That was still fairly attractive. As those rates come down, it becomes less attractive. I can tell you the time frame that I have for unclaimed property claims, which is very long. I can't necessarily tell you the other time frame, since the funds had been used to other purposes at one point in time, whether or not that changes. So that gives me some pause of how much risk to take with those funds, while I would absolutely take more if it is just the unclaimed property job that I have. I've been a little hesitant to fully deploy it. And I will tell you, it's a little concerning when I invest even just $100 million, because there's a very real possibility that I could lose $1 million or $5 million when that goes on market values. And I want that to be something that everyone embraces as we go forward. So I've moved twice, I believe, around August and January. of last year, so August 2 years ago, then January a year ago, the value of that $200 million at year end after the distributions of all income to the fund was $214 million. So we're up modestly. We're up better than I would have projected. And the mix that we've been using is a 70% bond, 30% equity mix because of the concern about volatility. How that moves going forward could change. We had a good discussion with the board just at their last meeting, which was after we wrote this bill, where there may be some interest in stepping further in equity. If any of you have any guidance on that, I would welcome that. And that could be a way that we add return and risk to the portfolio. Short of that, if we continue to look in the fixed income realm for yield, one of the things that was attractive to consider is dollar-denominated foreign bonds. And in that world where they are dollar-denominated, and so all of the things the revisor was reading through are the risk mitigation pieces. We only want developed economies. We only want those that have never defaulted on debt. They must be A-rated by a ratings agency, et cetera. But in that world, it's actually possible that the total risk or variation of the portfolio would be slightly lower by not having all of your eggs in one economy or one interest rate move. And over the time that I was watching it, there were bonds that were available where on a 3-year, it would add about 80 basis points to the return. On a 5-year, which was the longest I looked at, it would add about 1.2%. But again, that varies also. What countries are issuing at that point in time and where would we look? Issuances have gone down. There was a Reuters article that said that foreign issuance was down about 19% in 2025. So that could change what all of those pictures look like. Nonetheless, fairly consistently, there can be a yield advantage to those bonds, and I believe the risk is prudent to consider of those other countries that fit that risk dynamic. That would be presented for consideration to the board and CAPERS to add to what we do. So the bottom line is it just adds another tool that we would look to, and exactly timing of use, et cetera, I don't have. It's possible that we would choose different types of risk. But if we stay with a heavy fixed income mix, it would be possible that I would consider, and then I can't speculate as well on what the CAPERS board would consider the possibility of adding these types of investments to that portfolio over time. Would welcome your guidance on this, as well as how much we should put at risk as we go forward. So those are some of the questions that we have, but that is largely what this is set to address, and I'd be glad to stand for questions as you have them.
Thank you, Mr. Treasurer. Now, there's an amendment attached to your testimony. Would you want to speak to that before we open for questions?
Certainly. So, and the proponent testimony is based on those. It clarifies a few things, like specifically saying dollar denominated and some other details. We had also overlooked the Fitch ratings agency, so that was added. Those were a couple of the key things that we had wanted to make sure were considered in that bill.
Very good. So you are the only in-person proponent. So committee questions for the treasurer on this bill? I know it's some new information for you. It was introduced, as you heard, last session, but we weren't able to get to it to have a hearing. So we did a little bit of, I guess, informative visits, both the House Chair and I, to learn a little bit more about this. So yes, Senator Rose.
Thank you, Madam Chair, and thank you, Treasurer, for being here. We heard a bill in the last week or two about the unclaimed property, specifically cryptocurrency, and during that hearing, the topic came up that the current state policy is that the state never takes over ownership. While we're addressing this topic, would you recommend that we put a different time frame on when the state could take ownership of these unclaimed properties, or should we leave that alone?
So I would say that might be a different topic than how we choose to invest the funds, and whether or not to tackle that, it is a valid question. At what point is it unlikely that someone will claim property, and should we We've grown from 600 to 680 million, which was a pretty big jump just in the last year. At some point, as that becomes billions of dollars, do we need to continue to hold that amount is a viable question. When to draw that line requires a lot of thought. When to take that property by the state and infringe on that right is one that we just want to be very prudent on, and might be one that merits its own consideration. I know that it was being brought specific to crypto in that bill and not overall, so there may be some unique considerations to crypto. I do like the thought of raising the question and trying to work through what does that look like? What is a responsible way, not only on time frame, but then to what purpose would we apply funds that are taken from those unclaimed property dollars? So I don't have that answer yet. We have been exploring it at the national level also to try and figure out a good way forward that everyone can somewhat agree to and explain well to all constituents to say, is 50 years the right time? Is 30 years the right time? I don't know the right time, but it is a worthy debate. Thanks for the question.
Thank you very much. Senator Fagg, then Senator Haley. Okay, Senator Fagg?
Thank you, Madam Chair. Thank you, Mr. Treasurer, for your presentation. Couple questions I have. What do you do with the earnings on this? So you go along, you make money, what happens at this point? Does it go to SGF? Does it stay there? What's the plan with what you make?
So the earnings do go to SGF, and that is ultimately where they go. Now, within the fund, so if it's in PMIB, those earnings are going straight to the state general fund. If it is, now there are a few exceptions where interest is actually being earned on a property that's remitted and it continues to earn property within unclaimed, but that's a tangent I don't need to take us down. This fund, the income distributions are returned to SGF as they are paid out, but right now I have not been electing to liquidate the earnings in the account. I've elected to let the earnings grow, and the way I have been moving forward with it is as we get additional dollars remitted, I've held the $400 million in cash. We might allocate more of that to this portfolio, but as $50 million comes in, that money goes into this portfolio with the same mix that it has. So the earnings and those dollars go in. They could be withdrawn at any time.
So that's at your discretion? It's not an annual thing?
The, the funding?
Yeah, the earnings.
So the earnings are twice a year. Generally, we do it in January and July based on the remittances in November from banks and other entities, and then we get remittances in the spring from insurance companies. So those are the two big chunks that come in. We look at what those dollars are that come in. We take out 6 months of claims to have on cash on hand for that 6-month period, and then put the remainder in to the fund is how we are currently operating. So we set that as a policy. That's a good question. I do believe that that is at my discretion for how we have set that policy.
I always hear the word foreign adversary. And I don't think if that's in there, I'm just looking through that. Is that something, that wording, maybe that we would incorporate, you know, because I think there's a list out there of foreign adversary.
There is.
Just wanted you to comment on that maybe.
So we didn't expressly add that to this list, as there is another statute which across the board prohibits us from investing in that. And so we could repeat that here. I don't know if a foreign adversary would check all the boxes for the risk pieces that are there, but the primary reason we didn't was since we had that statute that said that's not an option.
Okay, and one final question. When you look at the rating, and let's say this A3, so we buy this bond, it's a 3-year bond, 6 months from now it goes to B. You have to liquidate those at that time. What do you do when it goes below that deal?
So we would have to look at liquidating it at that point in time. I don't know what flexibility we would have if the market indicates that that would be a bad idea. The change in ratings, we would also look the countries that issue A debt tend to stay as A. If there's somebody that's flipped back and forth, that would be a red flag.
Thank you. Senator Haley, questions?
Yeah, Madam Chair, that was to my, to the last point that was made. Thank you, Mr. Treasurer, for being here today, sir. In the amendment, it talks about which countries have never had short-term or long-term debt obligations. So my question was akin to that. If there is that listing already, do we know, or are we able to readily ascertain what that listing of countries would be? Just so there might be some ancillary concerns, as have been, I think, raised by Senator Fagg, as to whether or not they would not fit for some other reason, potentially. And I don't expect you to have it at fingertip, but does such a list exist, and how we might better hone from that beyond those, that beyond not having short and long-term default might be further unsavory for us to align with.
So I think we could look at it from two sides of the coin, the list of countries that we might consider or the list of countries that we would not. And generally the way that I would approach it is to say, okay, I think I want to add 10 million of this type of debt based on yields that I'm seeing. What countries have the best offering and who best meets this set of criteria to add that particular issue. But generally, given that all of the emerging market countries are off the table because emerging markets are not an option under this bill, it is the developed countries that are there, that puts you to a smaller data set of countries that would be available to invest in. So generally, I'd look at, is this country one that would meet the list of criteria to be in the investable pool?
Thank you, and Madam Chair, Mr. Treasurer, I remember one time long ago, I was here in the legislature, there was a hue and cry for us to divest from Sudan because of some political, I don't know if they would have met the criteria of, having short-term, long-term, but it was a pretty solid part, if I remember correctly, of Kansas's portfolio, and it was more for political reasons than for economic, that there was a large, I think it was during Brownback's administration, the governor was in, and it was a big push because it would have affected, or did affect our portfolio to divest, but not. So that was one of my questions. The other quick question, Madam Chair, Mr. Treasurer, 5% magical number, is that because of some volatility unforeseen, or, I mean, give or take, or is that just a fixed number that you've looked at through all your considerations? Is a safe zone? I'm also anxious to hear that from Mr. Conroy as well.
Yeah, so that would just, so to the first one on Sudan, Director Conroy can probably speak the most thoroughly and eloquently to that one. It would not qualify here as an emerging market. I don't know that they have dollar-denominated debt, but just that type of a country would not be able to be considered. Then as we look to, let's see, you had the comment on Sudan, and the second one, if you'll pull it back to my brain.
Was 5%.
The 5%, yes, thank you.
Was that number, yeah.
So it is not a perfectly optimized number. If we really looked at what would be efficient, it would probably be a higher number than that. It was just realistically, we wanted to make sure that this wasn't anything that would be a mainstay. It would just be something to add a minimal yield on a fraction of the portfolio. So.
Thank you, sir. Always appreciate it. Thank you, Madam Chair.
Mm-hmm. Committee, you're very welcome. Committee, any other questions? We do have a neutral. Okay, thank you, Treasurer Johnson. We may have more questions, but so if you look in your folder, there's no written testimony or anyone in person that is opposing. So neutral conferee, we have Alan Conroy. I think I saw you. Yes, there you are. Welcome. Introduce yourself.
Good morning, Alan Conroy from Capers, and I think you have some testimony from Capers on Senate Bill 32. And of course, as always, the Treasurer's done an excellent job explaining the bill. I might just add, of course, the TUP fund, although it's managed by the Capers Board of Trustees, and of course, as indicated, it was sent over to earn a higher rate, hopefully a higher rate of return on that TUP fund, the Treasurer's Unclaimed Property Fund, than just leaving it within the Pooled Money Investment Board. So I think we've been successful on that front, but I guess my point I wanted to make is the Treasurer's Unclaimed Property Fund is a separate trust fund. So it's not commingled with the Capers Fund. It's not, doesn't impact the actuarial valuation, the funded ratio, the employer contributions, all that. It's held separately. Our investment staff then helps manage that for the treasurer and the board of trustees, but it's a separate fund off to the side. And so, and again, as the treasurer indicated, the earnings eventually get back to the state general fund. The bill outlines, the security or the sort of the guardrails. Should go down this road, and the treasurer's explained that. I would just note in the bill, there is a prohibition, of course, from buying any securities by countries designated by the U.S. State Department as state sponsors of terrorism. So that is in that bill, besides the general one that's overarching that applies to all state agencies, including treasurers. But so no fiscal impact, no actuarial impact. We can certainly, the staff can carry this out should Senate Bill 232 be approved.
Thank you, Director Conroy. Committee, do you have any questions for the director? Well, thank you very much. I appreciate the information. Before we close the hearing, are there any questions before we let them go? Senator Fack.
Thank you, Madam Chair. Could I ask the treasurer another question real quick?
I'm sure he'd be thrilled.
I like the 5%, so that's cutting that. The question I would have, would you envision that full 5% would be, you see an 80 basis point deal that would go in one country, or are you going to have some diversification within that 5%? That's my question.
It's a good question, and I haven't thought through that. If I would dare to go up to 5% in one country, trying to do a quick calculation of numbers that have even crossed my head in an individual issue of that portfolio. So if I'm running 5% on 200 million, would I put 10 million in one country? I'd say that could actually be possible on that amount. As that grows to 400, it becomes less likely.
Thank you.
Thank you. Thank you very much. Seeing no further questions, committee, we will close the hearing on Senate Bill 232. Thank you all for being here. It was an excellent presentation. Committee, at this time, let's turn our attention to Senate Bill 435. I'm going to open the hearing on Senate Bill 435. I'm going to ask our revisor to brief us on that bill. Thank you.
Good morning again, Madam Chair, members of the committee. Senate Bill 435 makes several amendments to the Capers statutes relating to the Board of Directors, the contribution rate for certain affiliating KP&F employers, and certain statutes regarding working after retirement. So Section 1 of the bill amends KSA 74-4905 relating to the Capers Board of Directors. And under current law, after the chairperson is elected by the board, the newly elected chair appoints another board member to serve as vice chairperson. The bill would change the appointment of the vice chairperson to an election by the board. For that, I'm sorry, I have vice president there, but I meant vice chairperson. Section 2 of the bill amends KSA 74-4967 relating to KP&F contribution rates. And under current law, employers that are affiliating with KP&F for past and future service pay a set rate at 16% contribution rate, while employers that affiliate for future service only pay the actuarially required rate in their first year. The bill would amend current law to require that all employers pay the actuarially required rate, regardless of what service is being affiliated, whether it's past and future or just future service. Finally, Senate Bill 4035 repeals two obsolete working after retirement statutes. Those are KSA 74-4915B and 74-4915C. And if approved, this bill would take effect upon its publication in the statute book, and I can stand for questions.
Thank you. Committee, do you have any questions of Eileen? Okay, seeing none, thank you. Our very first conferee is Alan Conroy, Executive Director of Capers. Welcome back to the podium.
Thank you, Madam Chair. Alan Conroy, Capers. This is a bill that was requested by the Board of Trustees, and as Eileen, of course, has done a great job. It'd probably be one of those famous things words you hear all the time. This is a technical and clarifying bill, with one little caveat. The first part is on the working after retirement, conflicting statutes. There were some that were enacted in 2000. They weren't amended in 2017 related to state and local elected officials. This just clarifies that and repeals the sections that are no longer appropriate. Under the police and fire employer contribution on affiliation, back in 1965, our actuary at that time didn't have that available rate, so there was a statutory rate put in place that'd be the 16% for the first year, and then it goes to the actuarial rate the next year, which is currently at 24%. Now, with the technology and our actuary and so forth, we can tell an affiliated employer that's just joining KPNF what that employer contribution rate should be for the first year, and so it just makes sure they're paying the current rate right out of the gate. And then the last thing, I guess slightly a policy choice, as Eileen indicated, right now, on the Board of Trustees, the chair is elected by the board, and then that newly elected chair appoints the vice chair. After discussion by the board, they thought it'd be appropriate for the Board of Trustees to not only elect the chairperson, but also elect the vice chairperson. And that's the third change that's contained in Senate Bill 435. Be glad to respond to questions and request your support for the bill at the appropriate time.
Thank you very much. Questions for Alan? I have one quick one, and maybe I'm just not reading it fast enough. It's on that election of the vice chair. The current person who's serving as your vice chair, was that person appointed by the chair under current statute? So
Yes, that's correct.
So at what point would this election take place?
It'd be on July 1st on the effective date of the bill. So this next,
Okay.
the next,
They serve out their,
the current one would serve out the full year.
thank you. Any other questions, committee? Okay, I do not have any other testimony, or this is hard to believe, nobody else wants to comment on this, Alan. So if there are no other questions, I will close the hearing on Senate Bill 435. Thank you for being here, appreciate that. And committee, look at the time, we can work two bills, easy bills. Would you, if you're amenable, I would like to turn our attention to Senate Bill 300. This is that Office of State Banking Commissioner bill. I think we heard it on January 26th, so I'll give you a minute to pull the folder out to refresh your memory on that. Senate Bill 300. And as long as you're pulling out folders, we're going to do Senate Bill 331 as well, which is also a bank commissioner bill. Okay, 300 and 331. Okay. Does anybody need a refresher on Senate Bill 300? Feel like you got it? Okay, Eileen, could you refresh us on Senate Bill 300?
Thank you, Madam Chair. Senate Bill 300 was a bill that came from the Joint Committee on Fiduciary Financial Institutions Oversight. And this is the bill that would prohibit the Office of State Bank Commissioner or any other state agency from becoming a receiver for any technology-enabled fiduciary financial institution that becomes insolvent or declares bankruptcy. And there are two criteria that would if either were satisfied, would deem a fiduciary financial institution to be insolvent. The first one is that the cash market value of the fiduciary financial institution's assets are insufficient to pay its creditor liabilities. Or the second condition is that the institution is unable to meet the demands of its creditors in the usual and customary manner.
Questions for the reviser? Do you recall this? Senator Goss, did you have a question? No, okay. All right. What is the will of the committee on Senate Bill 300? Senator Gossage?
Madam Chair, I move that we pass Senate Bill 300 favorably.
And second, Senator Argabright. Any questions, discussion? Okay, you've heard the motion and a second to pass this bill out favorably. All those in favor say aye.
Aye.
Any opposed, no. Okay, bill passes out favorably. That will head to the Senate floor, hopefully. It's a pretty simple bill. Okay, Senate Bill 331. Would you like to have a refresher on Senate Bill 331? Go ahead. Since we did this in January, would you mind, Eileen? Thank you.
It's a whole month later.
Yeah.
Thank you, Madam Chair. Senate Bill 331 is the bill that would repeal the statute that put some conditions on the payment of negotiable instruments. This is the one that would eliminate the ability of eliminate the ability to call a payment of a negotiable instrument illegal or invalid because it was paid on a Saturday. This is the really old statute from 1914.
It allows us to bank on Saturdays, yeah. All right, any questions of Eileen? All right. Do I have a motion on this bill? Senator Hill.
Madam Chair, I move that we pass this out favorably.
Okay, do we have a second? Senator Haley, seconds. Very good. So I've got a motion and a second. Any discussion? All those in favor then say aye. Any opposed, no. Motion passes. So that's what we're going to do today. We're getting out early. Tomorrow, we're going to have a hearing, and then we're probably going to work the PBM reform bill. We need to do something with that either. It gets out or it doesn't, right? So that's a big bill. So we want to we'll work that bill. There may be amendments, I don't know, but we'll see. Okay? All right. Any other business before the committee? Well, you get out early today. Use your time wisely. Meeting adjourned.